Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is February 3rd, 2023. We just had the U.S. jobs report that came in much stronger than expected. The number of non-farm payroll jobs increased by 517,000. That was much higher than the 185 expected. The unemployment rate dipped to 3.4%, near all-time low or decade low levels here for the unemployment rate. They were expecting it to rise to 3.6%. No go there. We saw average hourly earnings come in at 0.3%. That was as expected, and the average hourly earnings year on year came in at 4.4%, which is a little less than the 4.6% last month. Average work week rose by 34 points to 34.7 hours from 34.3 hours. That's a big leap, and also indicative of stronger job growth. Jobs were plentiful across the board, with leisure and hospitality leading the way, with professional and businesses also saw big gains in the current month, as did leisure and hospitality 128, manufacturing plus 19, construction plus 28. Professional businesses plus 82,000, healthcare plus 58,000, transportation and warehousing plus 23,000. Across the board, job gains. Good news for the dollar. The dollars have moved sharply higher. Let's take a look at the euro versus U.S. dollar. And if we look at that on the hourly chart, we've been talking about red boxes, and this was one red box that we saw here in the euro versus U.S. dollar, where the price traded up and down, up and down, up and down. We did move below this red box earlier this week, but that was quickly taken back. Not quickly, it took about 4 or 5 hours, but the price ultimately did move to the upside and then extended all the way up to new highs that we saw yesterday, and have since seen the rotation back to the downside. We're in the realms of another red box down through here, which can find the pair for the previous area before this area right here, and we can see we're sort of in the middle of that old red box here. This area right down here near the 108 level is our next target, or one of our targets on the downside. The actual next target is the 38.2% retracement. Then we look toward this area right here, which happen to be the low price through here as well. These are different lows and highs that we came in that area right through here. So you can see it is a fairly well-traveled or area where the price either found support or resistance. And again, we found support against that level earlier this week. So that would be another area near the 108 level, and then down here toward the 50% retracement of the move up from the January low to the high that we saw just yesterday, comes in at 107.558. What do we not want to see in the euro versus a U.S. dollar if you're a seller? And that would be a move back above this level right here. Again, that is the high of this swing area through here. I think that would be a level that traders would look to lean against on any sort of move to the upside. So if we see something like this rotation to the upside, I expect to see sellers against that area through here going forward. We'll see. I mean, it's hard to ignore this better than expected data, but I don't know. We've often seen markets do strange things, and we're seeing certainly strange data come out here in the employment report. Let's take a look at the dollar versus yen next, and on the hourly chart, we're seeing a rotation back higher here, and that rotation is trying to get above this trend line here that has a number of different highs off the hourly chart. You can see them all through there, and the price came up and went a little bit above it, but has since rotated back below that level. We'll be watching that level. Let's see if I can get a read on where that might come in. Move this down right through here. Comes in around the 130.11 level. So if the price, with the current price trading at 129.94, we are seeing some hesitation above that level. We'll see if the price can get above 130. What we have seen today is the price move above both the 200 and 100 hour moving averages. That's the 200, the green line. This is the 100, the blue line, and that level will be a support level. Also near that level is looks like the broken 38.2% retracement of this move to the upside, which we nearly recovered, but we found support yesterday against this swing area, and as you can see, we rotated quickly to the upside. So the 200-hour moving average currently coming in at 129.716 is going to be, or thereabouts, is going to be our close support on the downside. Now look for buyers against that level in the dollar versus yen if the bulls are to keep control in that currency pair. Let's take a look at the sterling versus U.S. dollar next. And if we take a look at the hourly chart of that currency pair, we are seeing a rotation further to the downside here, heading toward the 61.8% retracement at 120.72. We broke below the 50% retracement at 121.43, and we'll look for that level to be resistance on the top side. Watch if we stay below the 50% retracement of the 2022 trading range, that would keep the the bias more to the downside for this currency pair. I think that would make sense from a technical perspective. Other levels to potentially eyes 121.66. You can see that was a swing low right here, another swing low through here, and maybe a swing high through here. So watch the 121.66 on the top side, 121.43 as resistance levels, or levels that traders might look to sell against if the dollar is going to continue its move to the upside here. With the sterling versus US dollar, but sellers certainly are control below the 50%, below the 121.61 level, and the 61.8% retracement at 120.72 is our next target on the downside for that currency pair. Finally, let's take a look at the dollar versus Swiss franc, and on the hourly chart, we saw the price move down to a new low in trading yesterday. Took the price actually on the daily chart. If we take a look at this swing area right through here, we fell below over the last 2 trading days, I guess I should say, this swing area, and that comes in between 90.81 and 91.01 on the top side, and you can see all the different levels through here where the market held support, including in the month of January, where the market found support against this area through here. So the failure below that level is of significance, certainly for the dollar versus Swiss, and we saw glimpses of that yesterday on the rotation back to the upside here. Saw some squeeze. In trading here today, we came up to the 100-hour moving average, found sellers against that level, which was all in plan of some weaker number, but then the price soared through both the 100 and 200-hour moving averages and tilted the bias back to the upside for this currency pair. We would have to see a break back below the 200-hour moving average near the 0.9186 level in order to increase the bearish bias, or to put the sellers more in control. Absent that, then the buyers are still winning here for this currency pair. So on the top side, we have the let me fix this chart. If I move the Fibonacci retracement to our new low through here, we can see that the 61.8% retracement comes in at 92.449. That level also corresponds, coincidentally or luckily or whatever, with these levels, these highs through here. You can see the few different high levels coming in right at that 61.8% retracement. At the getting my arrow here. We traded above and below it here, but then reestablished support here before moving to the upside here, and then breaking below that level, moving lower through here. So this 61.8% retracement is coming in at a fairly decent level at 0.92455. Watch that going forward. So once again, much stronger than expected jobs report. Dollar moving to the upside as far as the stock market goes. The Nasdaq is down around 250 points, and the Dow is down 200 points, and the S&P is down around 50 points in pre-market trading as we head toward the opening. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.